Good morning, Stackers. How have gold and silver reacted to the US strike on Iran over the weekend? We'll take a look at gold, silver, and platinum with me, Joe Main, brought to you by Perth Bullion Exchange, perthbullion.com.au, and Mastering the Markets, masteringthemarkets.com. It is Monday, the 23rd of June, 2025. Let's do a quick synchronized slurp on a Monday morning. Ready? 3, 2, 1, slurp it, go. My goodness me. What an interesting time that we live in. Here is gold on the daily time frame priced in USD 3,375 US dollars. So almost all of the markets are open now. You still have the London market to open. That doesn't occur until 5 p.m. roughly Australian Eastern Standard Time. So they can play obviously a large part in the price of gold. But what have we done in the last hour and a half since most markets are open? We did gap up. Okay, so obviously if you've been living under a rock, okay, the US struck Iran's nuclear facilities, okay, and with tensions and stuff, gold is a risk-off asset, so we knew gold would have a bit of a rise on the market opening, but it hasn't gone crazy. I mean, it had a bit of a rise. Let's take a look. We opened here. We were interestingly just below this downtrend line right there. It was 3,370. We've gapped up around about $30 to not gapped up. We gapped up to a few bucks more, but we've come up to around about 3,400 US dollars, and we're back down another $25. So it hasn't gone hog wild. Okay, again, the London market isn't open yet, so let's see what happens there. So that's gold. Look, not a lot to say. If I was just talking about it from a pure technical perspective and not talking about it from, potential future escalation in wars and conflicts and all that kind of stuff, just from the pure technicals, it's still above the downtrend line. So that's fine, or it's back above the downtrend line, I should say. As you know, I've been saying anywhere above here, and I'll stick with it for now, anywhere above the top end of this zag zone from this high and this low. So we're through there. That's good. Anywhere above here, I'm going to say a new all-time high in gold is coming soon. Now, could I be completely wrong with that? Yes. Should you dollar cost average anyway? Yes. Does it really matter in the long term? Not really. I think gold is going to much higher down the track anyway. So don't worry about the little ups and downs. But look, it's good to see above that downtrend line, sure. And I do think a new all-time high in gold is coming soon. What it does when it reaches a new all-time high, I don't know. Could we have some kind of a little double top? Is this a liquidity grab up here and then we head back down, just chill out for a while? Quite possibly, but I'll just stick with that for now until the data tells me otherwise. Back onto the hourly time frame, what would I need to see in order to be confident that, like extra confident that a new all-time high in gold is coming soon? And when I say soon, I'm talking weeks, couple of months, maybe, not 6, 12 months down the track. You at least need to see it crack above. If this is a bottom right here, if it is, okay, only a big if, you've got around about that $3,400 level. Okay, so $3,410 roughly. So get through that zone right here. So break and hold there, and that matches up exactly with the resistance. Isn't that interesting? How it always happens, almost always. So this is the zag zone right here between the 0.382 and the 0.618. That lines up exactly with that support right there. So break that support, do something like that, and then I'll say, okay. So now we're making a larger move, and if it breaks through there, then I'm going to say, we're making a play for the all-time high. Again, what we do when we get there, nobody knows because what's going on with the world, etc. But I think a new all-time high coming soon, and that would give it much more credence to say it's coming in, weeks and not, a couple of months. That is my humble non-financial advice opinion. And of course, if we just break down below, go back to the daily for you. If we break back down below that downtrend line, and particularly through that 618 right here, if we break back below here, then I'd say, down through that trend line, not good. This was just a small reaction. Who knows what's going to happen with the world? Exactly. Peace talks could start tomorrow. You never know. But yeah, back down below there, if that remains as resistance, okay, then we're saying, then we'll talk about some lower prices. That is it for gold at the moment. Let's wait to see what the London market does. That will open again like 5 p.m. So we've got a number of hours until that happens. I go live on Tuesdays and Thursdays. So tomorrow's show, that information will have already occurred. So join me live tomorrow on the Tuesday show, and we'll talk all about it again. That is gold. Let's take a look at silver. Now, silver, I created a video on Friday, I think it was, which has had some really great views in relation to my channel. I have a lot of new subscribers over the weekend, so welcome to all those new subscribers. It was based off this video right here. It's called Silver Going Lower, Where To? And so welcome to all the newbies. It's had, well, it's now over 2,000 views, and that's, I have 1,000, I have about 1,800 subscribers now. Again, welcome to all the new ones. So that is based on, and I'll quickly show you if you don't know what I'm talking about. Let me show you on the 4 hour and where we were. Let me get rid of a few things for you. I'll get rid of that and that. So silver is at $36.08. So we're back up a little bit. So that's, good to see. I'll get rid of you. I'll get rid of all of it. Let's just start with that. And we'll go get rid of you, and get rid of the 1980s fib as well. And screw it, we'll get rid of that too. All right, so here's where we were when I did that video. Okay, so we were at this low and this high. There we go. So we were right here, and we hadn't printed this low just yet. And I was talking about this zag zone right here. So from this low and this high, again, none of this existed. Okay, so if I can, won't show you. Just pretend like it doesn't exist. And we had this area right here. And I said, okay, if we start breaking through this area here, okay, so that looks like it's now correcting not this move to this, not from here to here. It looks like it might be correcting a larger move. So then we have to go, okay, what's that larger move that it could be correcting? So then you take the next low and you take it from here. So that was pretty simple. All you have to do is then do the next one. So that's between the 0.618 and the 0.382, again, from that high and that low. And then I said, okay, this needs to be respected at around about $36.20 Now, if that does not remain a support, okay, doesn't look like we're just correcting, and because we're correcting because markets go up and markets go down, they zig and zag. That's kind of the normal expected range that you could see after you have a bit of a move. Come back to this-ish kind of area between the 0.618 and the 0.382. Very normal, very expected, okay? But if you fall below there, that means, oh, okay, it looks like we might be correcting an even larger move. So what might that larger move be? And so that's where we were. We hadn't even broken through that 36.70 level. We did that. So then looks like we were potentially correcting this move. And I said, if that doesn't hold, we might be correcting the next move. So then I need to go, and I think I took it from here to here. I'll double check on that. Maybe I'll pop it on the daily. Yeah, if it was on the, was it on the daily or was it the next one down? I think it was the next one down. Could be wrong. Was it here? No, it was there, I'm pretty sure. If we go to the 4 hour. Let's see. No, it wasn't. No, it was right there. That's it, right there at that move. And so then I said, okay, so we might be correcting this move right here. And then you just take your Fibonacci once again, and you do it from the 0.618 to the 0.382. And then you had this expected support range. Okay, and it's anywhere down to there, but it could also bounce at the top end of the zag zone, which is this green box right here. So far, we have had a double bottom right here, and so far it has bounced off the top end of the zag zone. And of course, with the news of the US striking Iran, etc., we have seen a bit of a gap up, just like with gold. So with silver, in the last hour or so, we were down around about $35.80, 36, and so far we have gapped up. It didn't actually even gap up, really. What did we do on the daily? The daily didn't even really jump up. So gold had a bit of a gap up. Silver just has had a little bit of a rise. It's not huge. Okay, again, gold had a little bit of a move and now it's back down a bit. Silver hasn't reacted hugely. Again, the London market still needs to open and do its thing. So far, double bottom. Okay, let's take a look at some indicators. What else might we have going on here? Show you on the 4 hour. So I wouldn't say personally yet that it is onwards, 100% onwards and upwards yet for silver. We could be. It's great to see it bounce off the top end of this new zag zone, okay? But what we need to see it clear through is probably at least back through this 0.236, and that's at 30. What do you know? About $36.20, that previous level that we'd spoken about. So clear here, and then I'll be like, okay, maybe the low is in. Where are we? Brush tool. Yeah, clear there. Do something like that. No problem. What I would want to see for sure to say, oh, okay, now we're going to break that 37.30 and onwards and upwards we go. I just take it. If this is the low, then you take the high here and the low here, and then you've got the zag zone or the zig zone in the opposite direction. And so that would be the 0.618 to the 0.382, and that is between here and here. Okay, so now what I need to see for silver is I need to see it clear $36.60. Okay, and that's actually matching up with previous levels that we talked about. It's matching up with this spike right there. Again, isn't that interesting how it all plays out with Fibonacci right there? So do that, and then, yeah, looking pretty good. Looking very good for silver, okay? Ignore the pattern, ignore the time frame and all that, but do that and then hold there and then break through. And I'd suggest probably breaking through there is going to be your kicker. And that's at around about, $36.60, $36.80. And then, I would say onwards and upwards we go and looking good. But yeah, again, wouldn't just say we're out of the woods just yet. Let's do the contrarian thinking and let's keep it on, could silver be going lower? I'm not saying it is, by the way. You've just got to, look at both sides of the bullion coin. So let's have a look on the daily time frame, and let me get rid of all this flotsam and jetsam for you. Okay, all this junk. Okay, so we still have the bearish divergence playing out at the moment. Okay, could it be fully played out? Absolutely, but that's where you have the higher high on the fiat dollar price and the flattening out or the lower high on the relative strength index. That just means the momentum is waning. Again, silver hasn't jumped up crazily on the Iran strike, the US-Iran strike news over the weekend. So there is a case to be made to say that it might not be the bottom here and we could potentially go down further. If we are, what are the areas that we need to watch out for? Well, I just had them in. And let me show you once again. You can take it from that low. I'll probably take from the daily now instead. Yeah, I mean, what you would want, if you want to see lower prices, and some people actually do because they want to be buying lower, okay? What you would want to see is it crack through $34.45 roughly. Again, it's from this low and this high. Maybe that's not the right one. If you take it on the daily time frame, it looks like you need to use a bit of a different pivot right here. So that might be a better one to use. I think I will use that instead. So that's down at, between roughly, you're looking at, let me get that for you, excuse me, between $33.80, that's that one we talked about previous, $33.80 and $35.20. So if you want to see silver go lower, because you want to scoop up really cheap silver because you are confident in the future that it is going to $50, $100, triple digit. I believe all of that to be true. We're going to $700 silver at some point, in my humble opinion, okay, 10, 20 years from now. But you want to scoop up lower, hey, great. You want to see it to come down to maybe down to $33.80. Or, as I posited in the is silver going lower, hey, could we be going even lower than that if you take it on the weekly time frame? Again, not saying any of this is happening. But right here, if you take it from this weekly low and this weekly high, and you can see that spike there on the weekly time frame, you never know. I mean, I really don't want to see it break through that 34, 35 level. That's just preferable to stay above. Now, interesting. Isn't this interesting? If all I need to do, watch this. Watch that. That was the bottom end, okay? I did it from here to here. Look at that. Watch this. This is so interesting with Fibonacci. Okay, so this was the bottom end of this zag zone, and that was sitting at $33.80. Now, if I move that to the weekly down there, and watch this, flip. Now that $33.80 now becomes the top end right there. Isn't that interesting how it plays out? So yeah, I would favor no lower, please and thank you, than about that $33.80. I'll give it down to there. Maybe that would give some people some max pain, okay? It would give people a lot of max pain down here at $31.75. Can you, again, as I said in that previous video, can you imagine how many people will be freaking the F out if you get down to $31.75? I really don't want to have that heart attack myself, so let's keep it no lower than $33.80. Not saying it's going there. We could rock it up from here, but there, yeah, is preferable to not go lower than. And we might just continue onwards and upwards here. I'll find one of those higher levels. But just watch out for that weekly. Okay, right there. On the weekly relative strength index, however, we're in an uptrend, so it's looking really good, and the markets just go up and the markets go down a bit, so no problem. So that is silver. Hasn't had a massive reaction to the Iran news. Let's see where we go at 5 p.m. Australian Eastern Standard Time when the London Exchange opens as well. And again, follow me live tomorrow and we'll see how that all reacted. Let's take a look at platinum. Platinum on the daily time frame, US dollars, 1,260. It basically did not a lot at all, I think. Maybe had a tiny little bit of a reaction. Yeah, gold had the biggest reaction because it's the flight to safety in uncertain times. Silver had a little bit of a rise. Platinum's had a little bit of a rise, but yeah, not a lot to say here. I still believe at this stage that platinum might go a little bit lower. So let's take a look about at why and where we could go down to. Again, similar with silver, you had that higher high, and then you've got that lower high right there. See that? So that, and now we're back in the sort of normal range of the relative strength index. That can tick over more. We probably need to reset that on the daily a little bit longer. So my bias, look, I'll just be honest, my bias, barring stuff that we can't see ahead of time, like, you know, Iran saying it's going to do X and Trump saying, no, we're going to do Y and blah, blah, blah and all that. Barring black swan events, I am going to say I am expecting platinum to go a little bit lower from here. How much lower? I don't know exactly, but let's posit. Okay, this is on the daily time frame. You can take one of a couple of areas. Excuse me. I'm going to take it from this recent low and that high. We have used that before. Let me get rid of all this for you just so you can and you, just so we can see it a little bit better and get rid of that. Cool. Let's take it from this daily low and this daily high. That is absolute bearish divergence. Higher high, lower high. I'm expecting it to go lower, and you can go anywhere down to, so this is the first kind of area. Again, you take it from the 0.618 to the 0.382. So in anywhere in this area, I would love to see a double bottom as such. So something like that would be fantastic. But you can get anywhere down into this area here. What's it? 1,155.50 US dollars would be the expected support range, the zag zone. Don't panic if it goes down. Don't panic if it goes down there. That's just a really expected move from this low and this high. If it does crack through here, okay, if it does start closing days down here, you go, okay, it looks like it's correcting a larger move. And then very simple stuff here. You just take the next major low, and I think that would probably be that pivot right there. So that's pretty simple. Okay, then you just take it from there to there. Does that flip? It almost does, doesn't it? Right there, and then that's your new support zone. So again, it can go anywhere to the top end. So you can still have it at around about that 1,150, we're looking at 1,160 kind of area. That's actually ultra bullish on this longer Fibonacci, okay? Because if you're bouncing off the 0.382, just the top end of the zag zone instead, and then you clear back through, that is ultra bullish, okay? But you can go anywhere down to, and no lower than, please, around about 1,060 US dollars. Am I saying it's going there? No, you just need to watch out for it. Cool. That is platinum, but I am expecting a lower move on platinum personally, okay? What do you think? Let me know in the comments. There is also some talk of the Strait of Hormuz being closed, and that can have a big effect on oil prices as well. I'll quickly show you oil prices. Let's see what they've done. Out of interest, oil has gapped up a little bit, but I actually wouldn't say oil's out of the zone in which you need to be a little bit concerned, though we could still have a bit of a price dip. Again, we don't know what's going on in the world, don't know what will happen tomorrow, but it has gapped up a little bit. It's about $4, $5, something like that. But it hasn't even broken that previous high right here of $77.50. And you have a potential bearish divergence coming in as well. So the market has reacted. It hasn't reacted as strong as I thought it might. Okay, even with possible talks of the Strait of Hormuz being closed, and that would affect around about 20% of oil. But again, America isn't hugely reliant on oil coming through the Strait of Hormuz, so does it really matter to them? I don't know. But what I will be looking at very specifically come the next sort of 10-15 minutes roughly, and I wish I could spend this time with you, but I have to sort of really look at it closely, is when the Australian market opens. Okay, I'm going to see what the price of silver stocks are going to do, what gold stocks, like gold mining stocks, silver mining stocks, are they going to react a little bit higher, what oil-based stocks are going to do as well, and we'll talk all about that on tomorrow's live show. That is Tuesday, the 24th of June at 9:30 a.m. Australian Eastern Standard Time. Make sure you join me on Tuesdays and Thursdays. Make sure also, please and thank you, that you do buy from Perth Bullion Exchange, perthbullion.com.au, if you want gold and silver to potentially protect you against bad stuff happening like this. You should be owning some kind of gold and or silver in your portfolio. Why? No other reason than insurance. Do you have car insurance? Yes. Do you have life insurance? Probably should. Do you have health insurance? I don't know. Gold and silver, precious metals, are another form of insurance. Hold some just in case of bad times, okay? And then later on down the track, you never know. Just like with the charts I've been showing you, I think gold's going to $8,000 to $10,000 per ounce. I think silver is going to anywhere up to, but triple-digit silver, no problem at all. Any up to those high prices. So you might be able to increase your wealth at the same time, but just buy some gold and silver for, bad time insurance. And buy it from Perth Bullion Exchange, perthbullion.com.au. Why? Free shipping. Yeah, free shipping. Do you get free shipping from your bullion dealer in Australia? No, you don't. Why not? Because I don't think there's any other bullion dealer that still does it. Okay? They're the first. Actually, I have heard of one other one doing it, but I won't tell you what that is because they're the competition. Perth Bullion Exchange, perthbullion.com.au. They are the first and the best. They are the first to offer free shipping in Australia when you have a certain number of items. It's not a dollar value, so you don't have to spend $5,000, $10,000 to get free shipping. You can't do that in all of the other big boy major Australian bullion dealers that I've worked for 3 of them. Okay, they don't offer free shipping. Perth Bullion Exchange, perthbullion.com.au. All you need is 20 or more items in your order. What that means is you don't have to buy 20 of one thing. You can buy 1 of this, 2 of that, 7 of that, 3 of that, whatever. Bit of gold, bit of silver, bit of platinum, whatever you need, and then as long as you have 20 or more items in your shopping cart, you'll see the free shipping option come. And it's sign-on delivery, express shipping. Okay, they're not going to send it via standard post just because you're getting it for free. No, you get express shipping. Okay, sign-on delivery, fully insured, all that other stuff, except you don't pay for it. Come on. You deserve free shipping because you're spending so much money. Okay, perthbullion.com.au. And of course, as you know, I highly champion Mastering the Markets, masteringthemarkets.com. They are an amazing educational program, okay? You can do their 10-week foundational course if you want to learn to be a better investor, and who doesn't? That's a very leading question. Do you want to be a better investor? Yes, Joe. Yes, I do. Why wouldn't I? Great. Go to Mastering the Markets, masteringthemarkets.com. Maybe consider, at least check it out, their Dow Theory Principles and Technical Analysis Foundations 10-week course. Okay, just check out the information, find out how much it is and all that stuff, and you go, you know what? I do want to be a better investor. I think it'll help me in the longer term. And 10 weeks of your life. It's not a lot in a lifetime to have a lifetime of knowledge. Okay, they are teaching you how to fish. If you understand that, they're not giving you a fish and just saying, "Oh, buy this stock today because of blah blah." No, they're teaching you how to fish, teaching you how to find them yourself. Okay, that is, and it's not just stocks; it's crypto, it's every kind of asset in the world. If you want to go full on, which I am planning on doing, the year-long comprehensive program. Okay, that's the one I'm planning on doing, starting very, very soon. You could do that one and be a full-on trader. You could change your entire career and just be a trader for a living as well. Have a think about that. And if you don't want to be part of a course, that's fine. Just be a part of their community. I tell you what, I've been a part of the Mastering the Markets community without starting a course for the last couple of months. I have already learned so much. My investing, my technical analysis has gotten way better just being part of the community. So if you go to academy.masteringthemarkets.com, you can sign up for a free membership. Okay, it's just free to join. You will only get their publicly available stuff, the general community stuff. Now people post there every day, but the most of the action, most of the talk, most of the alpha, the secret sauce, is in the Mastering the Markets Academy, which you do pay for. It's a monthly subscription. I'll put a link below to the sign-up page for that. I do not receive referrals or any kind of commission or anything like that. I just champion these guys. Now, I am being sponsored by them, so I get complimentary access to the Academy. But tell you what, I would be paying for this, okay, for sure, if I wasn't getting it for free. Cool. You get multiple weekly live session calls with multiple educators. You get everyone talking about the stuff that they're looking at. Okay, it's just amazing. I won't go into it any more than that. Mastering the Markets. Masteringthemarkets.com. What do you think the price of gold and silver are going to do when the London market opens? Again, that's at 5 p.m. today. If I get an opportunity, I will post something maybe on one of the social media channels. I might post it here on YouTube as a YouTube post. I might post it on my X account. That's x.com/itsjoemain. So just follow me on all of those. And if we have a bit of a spike in gold once the London market opens, I'll let you know. I'll keep everyone updated. But I will be going live on Tuesday, tomorrow, 9:30 Australian Eastern Standard Time. There'll be a link on my page somewhere. There'll be a link on all of my social medias. Ladies and gentlemen, you've watched Good Morning Stackers for Monday, the 23rd of June, 2025. We talked US, Iran, blah, blah, blah. You've seen what the markets have done. Grab your tasty beverages. Let's do a final synchronized slurp. You know you miss it when I don't go live. We'll go live tomorrow. Ready? 3, 2, 1, go. Thanks for watching, people. Love your work. Stay safe. Stay informed. Keep stacking whatever you're stacking. I'll see you tomorrow for the live show.